Welcome back to the Universal Growth Network's Money Channel with another episode of The Chart Code. So, let's talk about how to enter and how to exit a trade. Well, let's get right to it. We're going to do it using moving averages, okay? The moving average is the number one indicator, all right? But we're not just going to use any moving average. We're going to discuss the VWAP, the volume weighted average price. All right, so let's get into the VWAP. The volume weighted average price is a moving average that tracks the price value traded over the total volume on an intraday chart, meaning it plays a vital role in day trading. Thanks to its easy operation and high quality, VWAP is favored by not only retail traders like me and you, but also by the big institutional traders and the market makers. All right, so both sides of the ball, we use the value weighted average price. All right, we're using price and volume to help us determine when to enter and exit. All right, so what makes it a valuable indicator is the combination of two overarching points of technical analysis, which is what I just said, the price and the value. All right, so this is how we do it. VWAP is an average price that uses the cumulative result of the typical price of each trade multiplied by the volume of each trade divided by the cumulative volume of a period during the day. All right, fancy talk. All right, but basically what that meant is the VWAP is an average price. All right, so it's the average of a bunch of different buys and sales transactions that uses a cumulative result of the typical price of each trade. So the typical price, if it's normally about $5, we multiply that times the volume of each of those trades. So how many people were buying and selling, how many transactions were occurring at that price point, and then we divide that by the cumulative volume of a period during the day. So that might be a 15-minute block, a 5-minute block, a 20-minute block, an hour. All right, so that is the formula for the VWAP. But lucky for us, we don't have to bust out a calculator. We don't have to do the mathematical equations. We can normally go to our settings, select the indicator VWAP, and they will superimpose the VWAP onto the chart for you. And the calculation will take place on its own as the price and the volume is fluctuating throughout the day. All right, so the VWAP line is formed by connecting these average prices in a chart. To view a VWAP line on a graph, specify an intraday time interval you want the averages for. A 5-minute or 15-minute VWAP is widely used to illustrate trends in day trading. I literally just said that. Okay. So the most popular way to use the VWAP indicator is to not use it alone. All right, this is not the holy grail. This isn't like the secret sauce, so to speak. This is one avenue to confirming a good entry and a good exit. All right, so we need more than one confirmation. All right, we talked about that in a previous video. All right, so the most popular way to use the VWAP indicator is to mix it with other indicators. The combination of the VWAP and the MACD, is a common method for analyzing price trends together. Now, what is the MACD, you ask? Well, the MACD is the moving average convergence divergence. All right, so the MACD, the VWAP, the SMA, the EMA, the 200 period moving average, the 20, the 13, the 48, the 8, the 9, all of these are moving averages. All right, so this should tell you something. This is a very, very important and impactful aspect of charting and trading. All right, moving averages. Now, this is how the indicators work individually. So let's say we're going to use this combination of VWAP and the MACD to determine when to make a good entry and when to make a good exit. This is how you're going to know. The VWAP. If the VWAP line is below the price, All right, so the price is $80. If the VWAP is hanging out around 79, 78, that may indicate that there's an upcoming bearish market. All right, so we may be looking to go down. If the VWAP line is above the price, it may represent an upcoming bullish market. So below, if the VWAP is below, we're going down. If the VWAP is above, we're going up. All right, so let's look at the MACD. When the MACD line crosses above the signal line, look at the diagram below, it's considered a bullish signal and indicates that the price may change directions to the upside. When the MACD line crosses below the signal line, it's considered a bearish signal and indicates that the price may change direction to the upside. So we're talking about a bullish crossover and we're talking about a bearish crossover. All right, so this is how we use the MACD. Now, when we're gonna confirm, when it's time to enter or exit, we want multiple confirmations. So we want the VWAP to tell us it's a good idea, and we want the MACD to tell us it's a good idea. When using the strategy of watching more than one indicator, the key is to try trading when the signals of both indicators match. All right, the picture below shows how this strategy works. Near the market open, we get the first long signal that the MACD line makes a bullish crossover. All right, so looking at this diagram here, you see you got a loose long signal, short signal, long signal, short signal. And the long signal goes 0.1 to 0.2. So the first thing you see is the bullish crossover. That's 0.1. Then it's also showing you that the price of the price of the stock is above the VWAP. This blue line going across the center. So once you see those two things, once you see the bullish crossover, number one, and number two, the price being above the VWAP, we're going to enter that trade. That's a long signal or a buy signal. Long means buy. All right, so that's a buy signal. We're going to buy at 284.60. Now it goes over here. It says 0.3 shows a bearish crossover, followed by a 4 where we have the price looking to, the price is below the VWAP. So this is a exit at 286.46. I'm sorry, 86.50. All right, so let's look a little bit further. Let's continue to read so we don't confuse each other or ourselves. All right, so near market opening, we get the first long signal that the MACD line makes a bullish crossover. Just said that. That's 0.1. Several minutes later, the price rises above the VWAP line. The signals of both indicators are consistent, and traders can opt to buy here. All right. At 11:50, the third signal appears as a bearish crossover for the MACD line. Soon after, the price falls below the VWAP line, bringing us a short signal. Investors may exit their long positions here. All right. Now, let the day go. So that was a quick entry and exit. Now you're going to let the time go by a little bit. All right. So during 12 to 1:15, the price has been hovering around the VWAP line. The VWAP line generally plays the role of a support level. The price bounces above the VWAP line at 125 and we get the fifth signal, which is another buy signal or a long signal. Investors could buy here since the sixth signal of MACD confirms the buy signal, and then stay in the trade until the next short signals match. All right, boom. So you're looking at the bullish crossover, number one, followed by the price being above the VWAP. We're going to enter. All right, we're going to ride that up. We're going to exit. It's probably best to exit when the price is away from the VWAP. All right, boom. So we're going to exit at the top of there. Take that quick $2 scalp. That was almost a $2 move. So if you had a delta of 50, that could have been your $100 right there. You got in with a delta of 50, $2 move, boom, $100. Exit the trade. Then we come in here, we looking, we're watching. We have a bearish crossover, number 3, followed by another short signal. All right, so that will be considered your sell signal. All right, another sell signal. All right, but you may or may not sell there. You may just be getting out of your trade. All right, I don't want to confuse you. All right, number 5 shows you another price point that's above the VWAP, followed by another bullish crossover, which is another entry point. So here you might enter the trade 287.50, and then we're going to ride this thing up and we're going to exit at 291.50. That's another $4 move. So if you had a 50 delta, right, that's $200. So boom, those 2 trades right there could have landed you $300 if you had a 50 delta. All right, so just a 0.50 delta, we need $2 up, $100. Come back down, wait for another entry, $4 up, $200. All right, boom, that's 300 right there. All right, so the bottom line, the VWAP is a handy technical indicator that takes both price and volume into consideration. So investors could employ it to identify prime entry and exit points in tandem with other indicators like the MACD or the Bollinger Band. All right, more on the Bollinger Band later. All right, so hopefully that helps you out. I hope that you can pick up what I'm putting down. The moving average is the most powerful indicator, and there are several variations of moving averages, a lot of different strategies to implement and employ them. This is one, the VWAP and the MACD combination. All right, I hope you get rich. Please subscribe to the channel, leave a like, and leave a comment below. Let me know if you actually use the VWAP in your trading. If you use the MACD, do you use it this way? Do you use it a different way? Do you combine the VWAP with another indicator, maybe the RSI? Do you not use the VWAP at all? You know, most of my trades, I don't use the VWAP. I'm looking at the 200 period moving average, the 20, the 48, the 13, the 8. But I understand that they're all moving averages, and there are ways to leverage different moving averages depending on your strategy and your approach to the market. Okay, peace and love, and I hope you get rich. Looking forward to seeing you all in the next video. Take care.